Actually, there is something I noticed on VIX75. When I'm trying to use the river account, I see that there's a lot of manipulation here whereby they add something, they short this time into 24, which is bad. But I have this site, Light Finance. It gives me more about monthly time frame. So I see that the origin of V75 itself is 10,000, 10,000, and the highest it ever gets to, it's about 1,994,229, which is this, which is this 1,019,000, 1,194,000. Then I think is 220 something thousand. But let's assume it is in 1,192,000. Let's assume that 1,000,000 is 94. That is 94. That's around 94. Because let's zoom. I want to get accurate. I want to get accurate. The accurate eye. Nice, 1,093, yeah. 1,193,000. No, 1,193,000. That's good. 1,193,000. That's okay. Now, we have gotten the high, we have gotten the lowest from the historical data of this market move. And here is monthly time frame. Here is monthly time frame. You can all see. Because it keeps selling, keeps selling. I was wondering what is going on. So I need to make that research and see. Now, since we have the origin and we have the first ILO, which is this, then ILO again, structurally. Now, let's go deeply. Let's go deeply. Now we have this from here to this. AI, ILO, AI, ILO. That's an uptrend move. And guess what? Which pattern is he using to sell, to buy? Flag. Flag. They don't allow to clone here. I don't know why. They don't allow to clone here. Yeah, okay, clone here. So this is a flag pattern. And this area of liquidity. And this liquidity, when market crosses it, it crossed it before it crossed. So cool. When market is like this, remember that I told you that once the price comes down up to this, once you see this, but for you to have a very big assurance, you need to bring it to this highest low. Once this market break and close inside, you are expected to enter at this point and use this last candle as stop loss. Ever since then, can you see how the market skyrocket, keep buying? Since during that time, we are not in that era, then that trading is now widely acceptable like this. Now we can see that the markets keep creating a low AI, then the markets give this massive to this high. This higher change of character. When the market did change of character, the market still do what? Change of character above, which is what? A very crucial moment we need to understand. Now, since this market is coming down all this while, now, which low is it needs to clear first? This is the last low that is here before the last one. You can see we have this low, the first one. Come here, this one, the first low. So this, the second low that followed. This is the second low that followed. And the market has already cleared this part to grab. Remember that no matter how it is, until market clear what's so called this particularly, that is when we are in downtrend. As long as market did not clear this 10,000, we are still in uptrend. We are still, that is the rule. That is the rule. Until the market cleared this 10,000, that is when we are now in downtrend. But if the market did not clear it, we are still in uptrend. So basically, why do I do this research? I was like, it keeps selling. There will be a time this market will refuse to sell again. And are we getting there? Then I haven't been able to see opportunity to do a very wide, big picture of this market. That's why I'm able to start for this trading in this light finance. To be able to have the historical data of V75 very well. Now, since I have it, remember it uses a continuation pattern here. Continuation pattern, which I always tell you, flag. Pay attention to it. Most of the time, can you see? Flag, your entry is going to be upon this place. When the market cleared, close in between this. Either a smaller time frame or bigger time frame, you have to mark this and market close in a little bit. That's your entry. We'll have milk this market right away from 2000 and November 2013 up to this one. We just keep going. That's a long lasting period of the market for you. Impossible. Now the market is the origin. This is the highest. And even at this point, you can see that the pressure that happened here, when it gets to this place, it has reduced drastically, but it's a continuation candles, but it's reduced drastically, not the way it was before. Now, since we have seen the high, we have seen the low, we have written it down. The highest is ever gets to 1,193,000, and the lowest it ever gets to is 10,000 naira. Then I say naira, sorry, my bad. 10,000. So now, since we have that, we already have the historical of this. market. So it's very easy to predict the next action. Now, if this market sustain to break back above here and give you a continuation pattern, don't you notice that that will be a very nice bull run for us? That's going to be a very productive, nice bull run because the market will just be clearing everything till it gets to this high again. That historical data. That historical data. Very easy. Very easy. Now, where do we need to pay attention to most now is this 80, 80 something thousand. Please go to the room and pick the call. Please go to the room. $93,800. Let's assume 93,500. That is, we round it up to say psychological line. So we need to pay attention to 93,500. Very, very well. Very, very well. Very, very well. 93. Is this 95? Oh, this is 95,000. Sorry. This 95,000. 95. We need to pay attention to 95,000. Exactly 95,000. We need to pay attention to it because that might be the point of its reversal. Alright, the market has breaking that place, which is it has breaking below more, and there's a liquidity here. One, there's going to be a what here? A break and retest and happen on this, which is 60,000, which is around, no, this 60,000. Yes, around 60,000. So we can see a resistance around 60,000. 60,000, 471, 471. 60,000. That's 60,000. Yeah, that's 60,000. 58. 68,000. Oh, 60,000, 59,500. 59,500. 59,500. Suggestion. 59,500. So I'm paying attention to that area. 59,500. After this, if this break continue going down, I'm paying attention to that because after this break, there is no retext. Then this is the only retext area. This is the only retext area ever system. You can all see. Let's put it in to see if likely we are correct. There's a very big gap here within these two. And a very nice gap here too. So let's use it very well here. I want to have the accurate number. 59,000 for something. Very nice to use a candle body. Yes. 52,000. All right. basically around 52,000 is still nice. 52,000 is still nice. 52,000. All right. 52,000. All right. Just jot it down. It's very nice to use a body of the candle, and sometimes it's very nice to use this. So anything from this region to this region, anything from this region to this region. That's when you see a lot of people will use a box when they are analyzing something like this. A rectangular box from here like this to something like this, and they extend it to the future. That's why you see. We already know that. Now, let's do the calculation, the math. Let's do the math. Because it's very good to do the math as well. Figure this out. This was the first impossible. This was the first impossible. Market had the calculation from here down to this. That's why you couldn't need to. That's market should have stopped here, which is good, but keep going down in a place. Maybe flat down here. So which is a continuation. Oh. No. Let's go to smaller time frame. And you see the blue line where it is. Can you see the blue line where it is? So I always prefer to use the random figure. Just that I don't know how this can always give us the accurate number, just like trading view always do. Okay, let's do it this way. Let me remove all this drawing so I can pick the exact number. Yes. Because I love to use accurate numbers or ecological line. So now, since I have it, accurate number is a accurate text edit. Yeah, accurate number is 60,000. This is 59,500, which is correct. 59,000. Yes, we have 59,000 then, which is correct. So 59,000. Now 59,000. There is a strong resistance there. This is a previous support that on resistance, and the market moved from there. And what's bull market here? What bull market here? What bull market here? In the past can still hold market. Yeah. So now, question we need to ask ourselves: can you see how it has broken here, which is a nice one? It has broken that particular number. A particular number, which was one of the significant low. It's one of the significant low the market should have respected, which is around 95,500. Yes, around 95,000. 95,000, yes. You know, I told you then. Now we have 95,000, a very strong one. The market cleared, but there is a resistance here, which is very nice. So we have gotten that. Mind you, and I told you that we can still be inward up trend. So since we have a future projection of where we can sell to, so at least we can manage to go trade for longs. So I have high of this, I have low of 10,000, I have a newly break low of 95,000, and they have a resistance of 59,500. So the which one is the more important there? Now remember, that's four. That's one of the key four you really need. The high has been identified, the low has been identified, the recent zone, the market break, which is 95,500. Remember, the market, we need to do what? Retest it before going further, which means 95,500 is where we need to put our resistance, a very key resistance, and a zone that the market will likely to expect. It is 59,500. 59,500. That is for VIX75. And I'm going to daily time frame to see. Now, on daily time frame, what we need to do, and you see that creating time to do this deep analysis is one of the reasons why I always love to do more research on this kind of trade. I always love to do research. I always love, because it's sharpened me, it built me. So remember that the market has broken this exact number, 95,000. 95,500. And ever since then, the market hasn't retexted. You already know it is part of the system that once anything happen like this, the market is trying to retrace back to around this zone again to text it before dropping. You already know. So I don't need to talk much on that. So what is the key line zone you really need? 59,500 and 95,500. It is very important for you. It is very important for you. Already find the low, we already find the high, which is that's normal. But the major two, that is very major two is 95,500 and 59,500. Now, when we go to 4 hours mastery, and this 4 hour mastery, we discover that this market isn't purely downtrend, you already know. And by structurally, you already know also that this is the high, this is a low, this is the higher is forming a lower low, the graph. So, and the lower low can stay long. And see, you can see, let's calculate it. This is a calculation that is very open. Can you see? From here to here. So can you see? The market still have a room to get to this place before doing a correction to this and continue. So don't need to stress yourself when you are doing analysis. Just have set up, this is the correction. This is the continuation pattern. I already told you. If you clone it, and you already know V-shape model. This kind of model is 2-in-1. This is the two. See, I told you where it is very advisable, at least for you to start trading yourself, is when you have this one now. Please, I'm in class. One, two, push up. Now, from here now, you can discover that it changed from your W pattern and push above to peak this liquidity because of this call. Peak the liquidity and started dropping and started dropping. Same thing it does here. To repeat it again here. Can you see it is part of its custom? It repeat it here again. Come back. And this anywhere you see that you cough, come back to pick it and drop. So we haven't that around this place again now. So that means this is very important for you to pay attention to. Now, since the correctional was there after the O move, but remember, it is stand on a resistance. This is a very big resistance. Can you see? So be careful when you are trading and always be calculative. Now, we have this. So this one is impulsive A. This one is correctional. So we need to have an impulsive. So that's it. So when you calculate your impulsive one from here to the last we did the correction and pick it, you place it exactly at here. You will discover that we still have a long way to go. So anybody that is saying that you don't need to buy at all, you don't need to, the best thing is to look forward to what sell opportunity. So at least when we created time to do all this analysis, you build some videos. Can you still have a room down, a room? And this market needs to drop to before doing another correction. I remember this is a correction house and this is zone 2. If we are to find about a strong zone like this, let's be realistic. Let's be realistic. Now, this zone, can you see how the market respected it? Now, where do we see something similar to it again? So we have this also here. Let's be realistic. We have a zone here to peak now. We have a zone here too. So if market did not stop here, definitely market is coming to around this place. The market did not stop here when it is fine. Definitely it's coming around this place. And that's also with the help of Fibonacci. You can see, for me, look at what happened there. Look at what happened there. After a break, then the markets go back and back, drop, give a W, push back to the zone. Which means when we start saying, after it gets to this point, in this particular point, fully you start noticing something like this. Start noticing something like you get W and you push up like this. Back to this zone, this particular zone. I don't see that many parts. That's why I'm using this one, and it is not zooming to me. Let's start zooming from here. We start seeing a W like this, and we push up. and it gets to this point or break further to get to this point, we can short our position. You can short our position. This is what price can do. If it doesn't stop here, we'll make sure that you put your pen down on what 90,500. Remember 95,000 with your pen and that 95,000. So if market break further of 95,000, remember that there is another one above, which is equivalent to 100. 100. Remember I told you 100. 100. So between 95,500 and 100, you should expect a reversal in that two area. So the key major resistance, the one that happened here, it is also 100. So we have a very strong resistance, a very strong one. That's why we have XR, we have XX. XR. You should share when I send volatility to you. I say something they call X and now support and resistance zone and strong resistance or strong support SX. I told you that 100,000, that market is playing a very key role around that area. Can you see that? The 100,000 is very strong. 1, 2, 3. So in future, you can still go trade and draw. Same way it happened here. 1, 2, 3, 4. Drop. Now, 1, 2, 3. So price is likely to come to this place too and do what? Drop. That's it. That's it. That's it. So that's it. So if the price is dropping and it reacts, anyway, stop. That's when you now calculate your trend. You now select massively. I'm still telling you, we're still in downtrend. You need to know that we're in downtrend. And downtrend. So how many key numbers do you really need? You don't really need that. No, you don't really need low. The two major ones you need is 9,500 and 59,500. But if we try to make it three, that means 100, 95, and 59,500. It is very key, important area for you. Very key, important area for you. And if we are to find the fourth most reliable one, is when we calculate this impulsive right away. So where there is likely to be what a reversal. Now, once you do that, you place it. So there's hope of market reacting at what? 97,000, 79,000, 79,500. Yes. So we have another one. 79 what? 1,500. Now, I think I shared something on the group where I was talking about there is a certain resistance around that 70K plus. I share it to the group. I share it to the group. I'm trying to check. Share it to the group. V75. 75. VIX75. I'm coming. Yes, I said this. There is a very strong resistance. All right, I told you that there is a psychological line at around 500 level and another strong resistance at 79,000, 70,000. And I told you we still have a very strong support around 35,000. Instead of we waiting for that long period of time, we need to deal with the closer one right away. What are the closer one? 95,000, 59,500, and 79,500. Those are the major four that you really need to pay attention to. Which are what? 100, 95,500, 59,500, and 79,500. Now, this is not useful anymore. The useful one is 1 and 2. The third one is 79. The third one is 79,500, which means the impossible might end at 79. 79, yeah, 79,500. 79,500. So that impossible in 79,500. So key 3-1 you need, key 4, key 4, key 4. You can put it in zone. You can put all of them in zone. You can put all of them in zone, which is what? 100,000. We have 95. Then we have 59,500, 59,500. Last on the list, we have 79,500. 79,500. So all you need to do is that 100 strong resistant, strong resistant. 95, we don't need to support and resistance, S and R, S and R. So 59 will be what? Strong support, SS. And 97,500 will be what? Reaction zone. Like just put zone there to make it very simple. This is what we need to now go and do on daily after we have used this platform to analyze. We now implement it on your chart will be very neat. You already know what you want and what you really deserve on the market. You already know that. So I think that is all for now. Thanks for watching and thanks for your time. We are all working hard just to make everything possible, and we have to make money. We have to make money. So you can see we are still in bearish move, nothing of buying. Don't ever try to buy at all. Don't ever try. The greatest thing you can regret is when you buy right at this moment. Very, very, very wrong. When I was holding this trade right away from it, I should have keep holding the market from that Saturday till this moment, but sometimes market did some sort of rubbish here because I see that bringing this level, I was expecting a pullback before dropping further. Just giving me too much of tremble, too much here. So, and I think I had my micro lost here, micro one. So I won this. Remember, I killed this market in major two places. I kill it right away here for this week that ended one. Then this new week we are presently I kill it from where myself at this place. Yes, right away around this place. Yes, around this place. I chop out from here. Uh, Picking our trend line right away from this place. Yes, down to this. So I make money here. I make money here. But I had a micro loss around this place, which I was hoping to long before this market react. So ever since then, I didn't find it very nice. A very nice one to join. This one I should have joined. I should have used to join today was expanding. Well, the kind of expanding is not the like my own expanding, and I want the kind of expanding was not really interesting. So, and you need to stick to rules. You need to stick your formation. So I should have joined the market when the market closed around there. But can you see these people momentum? So that's what holding back because I'm still suspecting a foul plan to get to the and react and boom. So that's nothing to worry about. And yeah, it wasn't nice. It wasn't nice pullback. Assuming it give this first touch, second touch up to this moment. And I close above this, I would have shot the market. Nice one. Nice one, nice one. But the market did not do that. The market was just reacting at some certain manipulation here, which I don't care. So that's how I miss all this. The best and most interesting area that I would have joined the market was when the market is here. It is very nice here. The setup was nice here, very nice. Give me the exact flag pattern. I always trade. Give me exact that. This thing is not like trading view. It's nice. It has a wide one, but this the advantage is all these um, instruments that can able to help you auxiliary you to make very fast. So this was should have my entry on this candle after it closed. Should have my entry and stop loss again. But then I was thinking that markets can react and it gives you momentum until I see this red happen in my life, which my stop loss was. Yeah, exactly. I entered the market upon this red candle. After it pulled back, I entered the red candle. The push up. I was in this green momentum profit until I see yeah, Bakadara very seconds. Because money are falling and I can't rush and start selling then. Because I don't know what the market had in mind. And yeah, I should have used this kind of setup here again. It is not giving me the complete one. Or start dropping overnight yesterday and today. And here too, I should have used the same thing as keep some unnecessary reaction, which is not very balanced to me. I love expanding. I love expanding very well. I love expanding very well. But my own expanding is that this leg must come below, must take this particular, must come like this before coming to this place. But it just give me a little, no, I don't like the expand. So drop, and this is where we are. This is where we are, and I think I find a very nice entry. Yes, I'm on the trade right now on this aspect of candle. I think yes. If it's not this, by going to 5 minute time frame, be good. Yes, this was nice. This was my model, and I take this on this kind of close. I opt on the trade around this particular place. Let me still check whether I'm still. I think this kind of come back and take me out, this particular one. and take me out before I yes, yes. That's what I'm seeing right now. As you can do that, come back and take me out. But, you know, as I say like this, I always break even. Is it that this green candle or it is this red? It is this red one. And the market still keep dropping. I don't need to change it. I need to see a nice pullback also before I join the trade because I don't like after the very nice one, it always give me it always love this one I chop and raw. Ever since this was really the market has been in some crazy, crazy, crazy pullback. That is not part of me. And I don't like to trade such trade if it's not part of me. No, I don't. So going to 5 minute time frame. I want to see why it took me out there. I want to see why it took me out there. All right. Now this candle closed. Yeah, wait for this candle. Yes. Oh, I remember I break even. Yes, I was selling at this move and I break even at the front. So it is this candle that come back and take me out. That is the candle because this is where I often the trade and I break even upon this candle. Yes, this 4 hours candles. This particular candle. Yes, I remember this particular candle. And this yes, exactly where I break even and the market come back and take me out for dropping, which is okay by me. At least it's not a loss, it's still a win. And you can see it's still a very signal. How do you join? You mark this last one, boom, close up on here. Should have joined the trade again. Same thing, the market is just repeating the same cycle of continuation, the same cycle of continuation, you can see. So since I have missed to rejoin right away from here, what I will do is I should see a price, this kind of setup again form around this place, then I will rejoin. So that's it. Trade your setup. Now, let's go back to, I think, let's call it a day. To me, personally, to me, I'm removing a shot, removing all drawing. Why? I want to implement the one I did personally now, which means I have coordinate of 100,000. I'm looking it immediately like that. And I know it was time. And two, 95, 95,000. 95,000. How many flats EPP? One. Then I have 59. I have 59. I have 59,500. Then I had 79,500. 79, 500. Those are the four key zones that I believe. Now, I believe in this as my words. Text. Strong support. Strong, strong support. Because market has reacted the time with that number. Good. When I lock it. Here is the TP general. This one is for the impulsive end. This one will be my words. My zone. This one. So zone will be, let me use, I don't like this now. Ah, every time, go more, I can the video. Sorry. No, this one is enough. This one is also is. Why do I limit this zone? A react feedback. This is my what? My S and R, support and resistance. S and R. And what always happen on S and R, either you see a reversal or break and retest. That is the work. So my S and R will be a red. This will be something like a light yellow. This will be a green, and the last one will be a black. So you can see that how I make everything simple. I already know where I'm going. I already know when it gets to this certain zone. I already know what I'm expected to do. So when it gets to the exact this place, I already know what to do. That's how you keep your short words simple. You keep the short words simple. So now you can easily reduce it. You can reduce the size. Yes. To make it simple. Reduce it. Simple as that. Lock it. Make sure you lock it. Make sure you lock it. It's very nice. So when you have that already, know the reaction and what you expect in between them, 4 hours time frame, already know the market has not retest, breaking it. So very good, very strong resistance already know on 1 hour. On your 4 hours already know we're in bearish. So we should be looking forward to opportunity to sell to this zone. To this zone. Remember, why do we use that zone? Remember. That zone is the work of this. What happened here? This I, this I, this particular I. This was the impulsive move. And if you clone it like this, can you see this exactly on that zone? Which means we have, as I love, impulsive, we have a correctional, we have impulsive. So you need to be very careful for you what a correctional. At this end, that's why I said 100 is very okay for you to, if it does not sell from here, it managed to get to this place. And you do what? To, I swear, can you see how it aligns? Our resistance, can you see? Can you see? AI, hello, hello. Simple. A trending market. A trending market. Look at how we already prepare. We already prepare. So can you see 1, 2, 3, 4? Those are the things. So it is the preparation. Now, what really paid me is that I did not do this deep to use another website to know what is hidden from this derivative. You know, derivative is the owner of this, and they will try to. That's why they short the time frame, not for you not to see the future. So you have to go extraordinary mind that you must be ahead of them. That's why I find out this. and I use this to be ahead of them. So to give me a monthly time frame, weekly time frame, since they only provide daily time frame for me, which is very bad. Overall view of the market, I don't know about it, and that's bad. So with that, what I have done on this particular place now, I already know that this is pin this tab and I'm pinning both of them. So I already know this is where we are heading to. And so I will be able to be catching them easily like that. And you already know that if you calculate this impossible, this particular one to here, the market is getting to its zone already. Can you see what I predicted earlier? Can you see? We're almost there. When I chop only this one and I chop only this one. So that's the two I chop out of this cup. So it is so far so good. That is how you need to be always analyzed. Can you see how my chart is very simple? Simple but detailed. Simple but detailed. Uh, what else do I need to do? Just to go to a smaller time frame and see if I can see opportunity. For 4 hours time frame, I don't think everything is still bearish. The only 4 hours opportunity was here, which is yesterday. The rest is keep dropping. So 1 hour, any opportunity. 1 hour is still there's opportunity here. Why don't? Likely to be an opportunity around this place, which means if this market is trying to do expanding triangle, I always love to do expanding triangle. Now I'm going to go deep into that on smaller time frame. I'm saying similarity of expanding. Now I'm going to determine this. So that's why you see me doing analysis on smaller time frame. I already know where I need to finish everything after my analysis. I've seen okay, this look like expanded triangle. This look like expanded triangle. We have our own expanding triangle. So let's go to 5 minutes. This is the last time frame. If yes, it looks like our expanding triangle. Exactly. Yes, exactly. That's how our expanding triangle needs to be. Our expanding triangle also has a few swing, or a touch back, a few swing, a push up. I must be aligned with this. Then we need to sweep this, and come back to around this before dropping massively. So now, what will I do? I will connect these two together. That's it. So where could be the entry? And the entry will be upon this. So if you check the picture I shared, once the market start dropping right away at this point, and that is the actual entry. The actual entry shorts. This will be upon the candle close here below, and stop loss will be above the candle while I do what? Calculate this impulsive move and do a replica of it here to know my full impulsive TP. I love impulsive TP, impulsive soft time. So can you see? So and zone is here, so I can likely to hold the market for long up to this zone, which is going to give me about 6.69% in return. So this is my setup. After this impulsive, there's still going to be correction now. That's why I always trade impulsive. I will look for the correction and then rejoin again. But this one, I'm out to hold it for long. Yes, I hold it. I don't care about the pullback. I don't care about the pullback from here once I see the opportunity and it gets to exactly there and give me something like this. I don't care about the pullback. For me, I always love to chop the impulsive first, wait for a correction to end and chop it again. But problem, let's see if it's going to drop massively now staying this type of correction and because of this expanding. Can you see? And you say, I support the expanding. So some people will have want to rush and do this. Stick to your plan. That's it. So that's how I always trade. And if we check from here, the oil impossible, the oil impossible, first TP will be around this. OTP will be here. So I'm going for 240p. So that's me. Can you see? I figure out my expanding, expanding, and look pretty exactly like that. I think I need to share this platform. So thank you.